All right, we're going to get started here. So good afternoon, everyone. Thank you for attending today's 2021 Fall Conference presentation, Travel Basics and Beyond. This presentation is being offered by the credit card/travel team from the Bureau of State Expenditures. Our team members include Ashley Cummins, Casey Morris, Megan Ream, Megan Zimmerman, Michael Clark, and myself, Alex Waldron. Our team mission is to assist state employees by providing guidance related to utilizing the state credit cards and help state employees understand and apply current travel policies and guidelines. This is to ensure that when we review travel expenses and credit card transactions, they are appropriate and accurate. So our agenda for today, we will go over general travel guidelines and rules, and then we have an activity for you which involves some trivia questions, followed by some audit observations, reminders, and best practices. And we'll go over some resources on the last slide that will be useful for you as you travel for New York State. So we have a little roadmap here of topics that we plan to cover during the presentation. This can be viewed as your table of contents so that you know exactly what section of the presentation contains the information related to the topic you are looking for. And this will be a useful reference when the slides are made available to you on the OSC internet site. And now I'll pass it off to Meg Ream, who will jump into some travel rules and policies.
Thank you, Alex. So a few reminders before we begin. As stated in the Guide to Financial Operations, or the GFO, Chapter 13, Section 1, Employee Expense Reimbursement Overview, and Chapter 12, Section 7.a, Responding to Voucher and Expense Report Audit Questions, as well as the beginning pages of the OSC Travel Manual, the agency's finance office or other appropriate authority is responsible for determining if each travel scenario is actual, reasonable, necessary, and in the best interest of the state. When questions arise, the traveler and the supervisor should work with the agency's finance office or other appropriate authority to arrive at a determination after considering information in published travel guidance, including agency-specific travel policies, the OSC Travel Manual, and the GFO. After consulting the guidance, if the agency's finance office or other appropriate authority personnel are unable to arrive at a determination, then they should contact OSC's travel team. We will gladly assist them in reaching an agency-specific solution. If you have asked a question during the presentation and it has not been answered by the end of the presentation, please follow the steps that we just outlined. We will begin by discussing travel status and the lesser of mileage rule. One of the first things any traveler should know is when they are in travel status. A traveler is in travel status when they are 35 miles or more from both their home and their official station. The official station is the employee's usual work location. It is designated by the head of the agency and must be in the best interest of the state. The purpose of having a correct official station is to help establish when the employee not only is in travel status, but when they are eligible for travel expenses. There are potential tax consequences when an official station is assigned incorrectly, so it's critical that the head of the agency and the designated employee data administrator, or EDA, have the official station of any employee be the primary place of work. Lastly, any travel between an employee's home and the official station or commuting is not reimbursable. When a traveler is working at an alternate work location that is not 35 miles or more away from their home or official station, then they are not in travel status and are considered to be traveling within proximity. When traveling within proximity, the traveler may be reimbursed for transportation expenses from the home to an alternate work location, the official station to an alternate work location, or between two or more alternate work locations. As a reminder, commuting reimbursement or travel between the employee's home and official station is not reimbursable. When traveling within proximity, especially for situations that may appear to be part of commuting travel, a traveler may have to follow the lesser of mileage rule. The lesser of mileage rule comes into effect when there is any travel between an employee's home and an alternate work location. Anytime this particular travel occurs, reimbursement for this mileage should be the lesser of the mileage between the employee's home and the alternate work location, or the mileage between the official station and the alternate work location. The lesser of mileage rule does not affect travel between two alternate work locations, and the traveler should be reimbursed for the actual miles traveled. To help show the different ways of traveling within proximity and the application of the lesser of mileage rule, we have examples in the next few slides. For this example, we have an employee traveling from their home to their official station. Then from their official station, they travel 10 miles to their first alternate work location, or Alt 1. Then they travel 15 miles to Alt 2 before traveling 13 miles back to their official station. At their official station, they then return home for the day. Throughout this scenario, the employee is traveling within the 35-mile radius circles of their home and their official station. So the two questions to think about are, does the lesser of mileage rule apply? And how much mileage is this employee allowed to claim? For this example, the lesser of mileage rule does not apply since there is no travel between the home and an alternate work location. The employee is not allowed to claim commuting mileage, which is why the travel between home and official station is in red. Therefore, the traveler is allowed to claim all other points of travel at the actual miles shown. To determine the total miles the traveler can claim, add the 10 miles plus the 15 miles plus the 13 miles to get a total of 38 miles. To determine the amount reimbursed to the traveler, multiply the 38 miles by the mileage reimbursement rate. The traveler receives the reimbursement for all 38 miles because transportation expenses are reimbursable when traveling within proximity, and the lesser of mileage rule did not apply in this scenario. For this example, we have an employee traveling from their home 25 miles to Alt 1. Then they travel 15 miles to their official station before traveling back home. This travel, again, is all done within 35 miles of the employee's home and their official station. In this case, the lesser of mileage rule applies because, per the criteria, travel between home and an alternate work location has occurred. Next, we have to determine the amount of miles the traveler can claim when traveling from their home to Alt 1. The rule states that we take the lesser of the miles between the home and the alternate work location, which is 25 miles for this example, or the miles between the alternate work location and the official station, which is 15 miles. Since 15 miles is less than 25 miles, the employee must claim 15 miles instead of the actual 25 miles when traveling home to Alt 1. Adjustments will need to be made when claiming miles with either the SFS mileage details or the AC 160. For this, the traveler would enter the date of which they traveled, the start location is their home address, destination location is their alternate work location 1 address, actual miles are 25, and claimed miles are 15. When all the proper miles are filled out completely and accurately, the total mileage the traveler is allowed to claim is 15 miles for the first leg, the actual 15 miles for the second leg, which equals a total 30 miles times the mileage reimbursement rate. The next example is a little tougher. The traveler drives 5 miles from their home to Alt 1, then 20 miles to Alt 2, followed by 15 miles to Alt 3, before traveling 30 miles to their home. They do not stop at their official station. Here, the lesser of mileage rule does apply, and it applies twice. This is because there are 2 legs of the trip that involve the traveler going between their home and an alternate work location. For the first leg of the trip, the mileage comparison for this would be the 5 miles between home and Alt 1 and the miles between the official station and Alt 1. For this example, the miles between official station and Alt 1 is 30 miles, which is greater than the 5 miles between home and Alt 1. Therefore, for the first leg, they can claim the actual 5 miles. The second instance where the lesser of mileage rule occurs is the last leg of the trip, which is from Alt 3 to home. The miles between Alt 3 and home is 30 miles. The employee would have to find what the miles are from Alt 3 to the official station, which in this case is 10 miles. Therefore, the traveler can only claim 10 miles, not the actual 30 miles, since the miles from Alt 3 to the official station are less than the miles from Alt 3 to home. So the total miles the traveler can claim is the 5 miles from the first leg, the 20 miles from the second leg, 15 miles from the third leg, and 10 miles from the last leg of the trip, totaling 50 miles times the mileage reimbursement rate. As a reminder, the most cost-effective method must be used. For this example, due to the number of trips the traveler has to take, the number of miles, and other travel considerations, a personal vehicle might not be the most cost-effective, and a rental vehicle or common carrier might be the more cost-effective options. One can determine if the most cost-effective method is being used by completing a cost analysis, such as, but not limited to, the OGS trip calculator. The last scenario we have is the employee traveling 10 miles from their home to Alt 1, 30 miles to Alt 2, 20 miles to Alt 3, and another 20 miles to their official station before then returning back home. For this scenario, when they travel to their second work location, they are in travel status due to them being outside the 35-mile radius of both the home and the official station. Here, the lesser of mileage rule does not apply. If any destination puts the traveler into travel status, such as the second alternate work location in this example, then the lesser of mileage rule does not apply, and the employee can claim actual miles. The employee can claim the 10 miles from the first leg, 30 from the second, 20 from the third, 20 from the fourth, giving a total of 80 miles times the mileage reimbursement rate. As a reminder, the travel from the official station to home is commuting and is not reimbursable. This is another example where the mode of transportation should be the most cost-effective method and evaluated through a cost analysis, especially due to the traveler entering into travel status. Completing the cost analysis will provide justification to reviewers that the most cost-effective method was used. Now that we have discussed what it means to be in travel status, how important official station is, and what happens if you are not in travel status and traveling within proximity, I will hand it off to Mike to talk about per diems.
Thank you, Megan, and good afternoon, everyone. My name is Michael Clark, and I will be speaking to you today on per diems. To touch base just on some general rules when it comes to per diems. The rates for per diems are based on the city or county where the lodging is obtained and the month traveled. These rates are typically updated annually for an October through September year, and travelers can locate these rates on the GSA website, which we will provide in our travel resources slide at the end of the presentation. Now, there might be instances where lodging cannot be obtained in the same location as the business purpose location, and the per diems for these locations may differ. An example of this will be if an employee travels to location A, however, they lodge in location B, which has a higher per diem rate than location A, the employee would actually be entitled to the per diem rate in location B, where they're lodging, even though it's higher than the per diem rate where the business purpose is. Now, this should be done within the best interest of the state, and there should be a documented business justification for this on the expense report if this scenario occurs. For overnight per diems, these follow the following order, which is dinner, followed by lodging the night of, and then breakfast the next day. This is also what we consider a trip, an overnight trip, which is important when we talk about some of the different methods of reimbursement on the next slide. Now, travelers are entitled to extra meals when traveling. If an employee travels 1 hour before their normal start time and arrives at their destination 2 hours after their normal end time, they would be entitled to an extra breakfast and dinner. So a scenario, my typical workday is 8 to 4:30. So if I were to leave at 7 or earlier and arrive at 6:30 or later, I would be entitled to that extra breakfast and dinner. Now, there are two scenarios for this. If you're traveling as an overnight trip, you are only entitled to claim a per diem on the first and last day of your travel. So if you're traveling for 3 days, you would only be entitled to that extra breakfast or that extra dinner on the first day of travel and the third day of travel. You would not be entitled to an extra breakfast or dinner on the second day because those are already claimed in your overnight meal per diems. The second type are day trips, which occur again when you are traveling during the day, but you're not staying overnight anywhere. Day trip meals are also taxable, whereas overnight meals are not. And lastly, when meals and our lodging is provided as a as part of a conference or event, you are not entitled to additional reimbursement. However, you would be entitled to reimbursement with supervisory approval if the meal does not meet your dietary needs or medical restrictions. So to touch base on the two different methods of reimbursement, there are two methods. Method one, the unreceipted method. For unreceipted method, you do not need to provide a receipt for lodging. So you receive a flat rate, which essentially includes reimbursements for lodging, meals, and incidental costs. The incidental costs are very minor purchases that you might have to make while on your trip, such as toothbrush, toothpaste, tipping hotel staff. There is a small amount that's already factored into the per diem amount for these potential incidental purchases. These rates are essentially determined in the city or county, again, where the lodging is obtained, or the location to which the employee is traveling, whichever is the less of the two. Under this method, the only receipts that are required are for those purchased with the travel card. And with regards to eligible meals for the unreceipted method, you would receive a flat rate of $5 for breakfast and $12 for dinner. Again, if you're entitled by leaving that 1 hour before and arriving at that 2 hours after. For method two is the receipted method. This is where you must provide receipts specifically for your lodging. And you can receive reimbursement for actual lodging costs and an allowance for meals based on the federal reimbursement rate. For this method, it's still required that you have receipts for any travel card purchases. Travelers can still receive extra meals if eligible under this method, but the amounts differ from the unreceipted method. Breakfast here is 20% of the meal per diem for an extra breakfast, and an extra dinner would be 80% of the meal per diem based on the location where you're staying. Now, it's important to note that this 20% and 80% breakdown is different than the GSA breakdown. The GSA breaks down these per diem amounts into breakfast, lunch, dinner, and incidentals. New York State does not actually reimburse employees for lunch or reimburse the incidentals separately. Again, the incidentals are already included in the per diem amount. You can locate the per diem rates between the breakfast and dinner rates in the GFO section 13, subsection 4D. And it is also important to note that travelers may not combine the two methods of reimbursement in the same overnight trip. So again, touching back on day trips, the other form instead of an overnight trip would be if you're doing a day trip. So again, you would be entitled to an extra breakfast if you leave 1 hour before your normal start time, and you would be entitled to an extra dinner if you leave 2 hours after your normal end time. If you are going the method one, unreceipted method, you would be entitled to a $5 flat rate for breakfast and a $12 flat rate for dinner. And if you are going the method two with receipted method, you would be able to receive for breakfast up to 20% of the meal per diem based on the location of where you're staying, as well as up to 80% of the meal per diem for dinner, again, based on the location of where you're staying. That is all I have on per diems. I will now turn it over to Megan, who will be covering the different types of transportation expenses.
Thank you, Mike. Next, we will go over some policy information related to transportation expenses. So when traveling for a business purpose, the method of transportation chosen should be the most efficient and cost-effective method of transportation available. Some methods of transportation available include common carriers, privately owned vehicles, state vehicles, and rental vehicles. Common carriers, which includes trains, buses, and taxis, are oftentimes the most efficient and cost-effective method. However, when that is not the case, or if a common carrier is not available, a privately owned vehicle or rental vehicle may be used. When using your privately owned vehicle, mileage reimbursement rates are determined by the IRS in collective bargaining agreements, which we'll discuss in the next slide. When using a rental vehicle, you should always use the OGS vehicle rental contract. and any gasoline purchases or other associated costs with the rental will be reimbursed. Now, when choosing your method of transportation, several factors to be considered are distance traveled, travel time, number of travelers, number of locations to be visited, type of transportation available, and employee salaries and overtime considerations. And just to note, if a traveler does not choose the most cost-effective method, we do require documentation surrounding the agency exemptions that justify the method used. Okay, so as mentioned on the previous slide, mileage reimbursement rates are determined by the IRS and collective bargaining agreements. The current mileage rate for a privately owned vehicle is 56 cents per mile. Some operational costs covered in that mileage allowance include gas, oil, accessories, repairs, depreciation, antifreeze, towing, insurance, and other expenditures. Therefore, separate reimbursements for these expenses are not allowed. And moving on to AC 160S and SFS mileage detail page requirement. For online agencies, travelers or their proxies must complete the SFS mileage detail page to document mileage claims line by line between destination points. When a proxy enters an expense report into SFS on the traveler's behalf, the proxy must either attach the AC 160S completed by the traveler to support the line-by-line mileage claims in the SFS mileage detail page, or use a snapshot review page certification method where the traveler reviews, signs, and attaches the snapshot. For bulk load agencies, travelers must complete the AC 160S when claiming reimbursement for mileage. The agency must also maintain a copy of the completed form. Next, we'll discuss traveling by Amtrak or plane. When traveling by Amtrak on state business, each one-way trip is not to exceed $68, which is the standard fare negotiated by OGS for all travel to and from the Albany, Rensselaer, and Hudson stations and New York City's Penn Station. Amtrak tickets may be purchased either online or at an Amtrak station or from the authorized state travel agency. Round-trip tickets must be purchased as Amtrak no longer offers open-ended single tickets. If travel plans happen to change, tickets should be appropriately altered before departure, which can be done online through the mobile app or website, or at the ticket counter, or by phone or travel agent. When traveling by airplane, a ticket must be purchased using the OGS contract with Delta and American Airlines. An exception to this contract is if a non-contract fare saves a traveler over $200 or more per round-trip ticket, however, only after prior approval has been obtained by the agency's finance office. And now, Casey will walk us through taxable travel and other useful information.
Thank you, Megan. So yes, next I will discuss some miscellaneous items as well as taxable travel. When determining if a miscellaneous expense is reimbursable, it's important to ask yourself if it is both business related and if it is reasonable. Only actual, reasonable, and necessary business-related expenses will be reimbursed, and such expenses must be properly indicated and justified on the expense report. Some examples of reimbursable and business-related expenses include telephone calls, toll charges, internet connection fees, baggage transfer and storage expenses, and then supplies and materials. And then also some examples of some non-reimbursable and non-business related expenses include such things as speeding fines, parking tickets, laundry, entertainment such as theater tickets or in-room movies, or any other personal charges. Next, I'll discuss taxable travel. It's important to note that taxable travel is subject to tax withholding and W-2 reporting. And some examples of when taxable travel occurs are meal per diem amounts that are paid in excess of the rates allowed by the federal government GSA rates, meal allowances that are paid for non-overnight travel or day trips, mileage reimbursements in excess of the maximum federal rates, or improper designation of employees' official station, which we discussed earlier. And then next, some other miscellaneous items to note. Record retention. Agencies are required to retain documentation supporting travel and expense transactions for 6 years. Only online agencies are required to use the attachment feature in SFS to store documents for not only the supervisory review and approval process, but also for any future audit requests. If the agency is bulk load, the official record must be retained in a central location, such as the agency's finance office. Documentation should be with the agency and not with the traveler. Agencies should have a well-developed, documented procedure to ensure that documentation retains its integrity of the original, that it supports legitimate payments, and that it complies with relevant record retention requirements. And there's more on this in GFO section 13.3, record retention. And then also, just to give an update on banned travel, publicly funded travel, banned travel still exists for the state of Mississippi and Indiana, and this is due to Executive Order number 144 and 156 enacted by the governor. Currently, there are no other states besides these two with a ban on travel. There was a previous ban on travel that applied to North Carolina, but that has since expired in December 2020. And then next, some things to keep in mind when reviewing and approving travel-related expenses. We came up with the acronym BARN to help agencies with planning a travel event and to help determine expense appropriateness. So you can ask yourself if the travel expense is in the best interest of the state, if it is actual, if it is reasonable, and if it is necessary. And it's also important to discuss agency discretion, especially in the event of specific travel scenarios that do not have clear black and white criteria to support. We ask agencies to use their agency discretion when reviewing and approving travel-related expenses. And this is where the BARN method just mentioned is very useful. And it's also important to note that it should not be a broader interpretation of the current rules and guidelines. Great. And next up is quiz time. So now we're going to test your knowledge on some travel and expense trivia. So I will read off the questions and your choices, and then we do ask if you could just put your responses, what you think the answer is, in the chat, and then we'll go over it. So question number 1. Who designates an employee's official station? Is it A, the employee, B, the employee's direct supervisor, or C, the head of the agency? And I'm seeing a lot of C's. So I will go ahead and confirm that C is the correct answer. The official station should be the employee's usual work location. The official station is designated by the agency, and the designation must be in the best interest of the state. Next question. To be in travel status, how many miles must you be from both your official station and your home? Is it 25, 30, 35, 40, or 45? I'm seeing a lot of C's again. And I will confirm that yes, C is the correct answer for this one as well. When employees are on assignment at a work location more than 35 miles from both their official station and their home, they're considered to be in travel status and are eligible for reimbursement of travel expenses in accordance with the OSC Travel Manual. Next question. How many total miles is the traveler eligible for given the below scenario? Is it A, 10 miles, B, 15 miles, C, 20 miles, D, 30 miles, E, 35 miles, or F, 45 miles? Seeing some B's, some D's. I've seen a little bit of everything here. And I will confirm that D is the correct answer. So lesser mileage rule would be applicable here, but since the miles from home to the alternate work location is already less than the miles between the alternate work location and the official station, Therefore, they can claim the 10 miles plus the 20 miles. And then that 15 miles is commuting miles and is therefore not reimbursable. Next question.
Okay. So according to the OSC Travel Manual, overnight meal per diems are for A, breakfast and dinner on the same day, B, lunch and dinner on the same day, or C, dinner one night and breakfast the following day. And it seems like mostly everyone is saying C's, and that is correct. An overnight trip is defined as dinner, lodging, and breakfast the following morning. Breakfast and dinner are reimbursable meals, lunch is not. Method 2 is known as the unreceived method, true or false? Okay, seems like an even mix, and the correct answer is B, false. Method 1 is the unreceipted method, and method 2 is the receipted method. Which overnight per diem method uses a fixed rate of allowance for meals, lodging, and incidental expenses? Is it method 1 or is it method 2? And I'm seeing mostly A's, and the correct answer is A, method 1. This method provides for a fixed rate allowance for meals, lodging, and incidental expenses, regardless of where lodging is obtained, including if lodging is obtained with relatives or friends.
All right. So an employee travels to location A, which is 35 miles from both the employee's home and the employee's official station. The employee lodges in location B, which has a higher per diem rate than location A. Can the employee claim reimbursements at the higher rate? And we have a yes or no answer here. Seeing a lot of A's, some B's. Awesome, awesome. All right, yeah, so the answer here is A. The employee would be entitled to the per diem in location B, which is where they lodge. And as a reminder, this should be in the best interest of the state, and there should be a documented business justification. Right. Next question. So travelers are entitled to an extra breakfast and an extra dinner per diem if they exceed how many hours before and after their normal work schedule? All right, seeing a lot of A's. Great. Your guys' participation is awesome here. We appreciate it. So yeah, A is the correct answer. So 1 hour before and 2 hours after. Travelers are eligible for an extra breakfast meal allowance if they have to leave at least 1 hour before their normal work start time. And then travelers are eligible for an extra dinner meal allowance if they return from their business trip at least 2 hours later than their normal working time. So next question, reimbursable travel expenses include all of the following except what? Awesome. I think you guys can see a theme here. We do have a lot of A's. So again, yes, the correct answer is A. Laundry is generally not a reimbursable expense. You can find more information about this at the top of page 7 of the OSC Travel Manual. Next question, please. Right. So boarding passes are acceptable as a receipt for travel, true or false? All right, yep, see a lot of B's. Awesome, yep. So the answer is B. It's false. Boarding passes are not acceptable. Transportation by common carriers such as a train, subway, bus, or airplane should have documentation that shows the purchase price detailed out. So additionally, all supporting documentation should be compliant with the New York State Codes, rules, and regulations in 8.10 that states documentation shall show the purpose of travel, date and items of expenditure, points between which travel occurred, and the times of departure and arrival. All right. And next question, which of the following can be claimed when using the mileage allowance for a personal vehicle? This is a little trick question here for you guys. All right, and it looks like I'm not tricking anybody today. So the answer is A, mileage. So charges for gasoline, oil, accessories, repairs, depreciation, antifreeze, towing, insurance, and all other expenditures are not allowed. And these are considered operational costs and are covered in the mileage allowance. So the mileage allowance also covers the portion of insurance attributable to the use of the vehicle for state business, so you may not claim reimbursement for any extra insurance as well.
Okay, so next question. So if an employee was directed by their agency to travel on a business purpose, and they got into a car accident through no fault of their own with a personal vehicle, the employee was required to pay a $250 deductible towards the vehicle repair costs. Can the employee claim reimbursement for the $250? See a lot of answers coming in, a couple A's, a lot of B's. Yep, so the correct answer is going to be B. They are not allowed to claim reimbursement for the insurance. As Alex had just touched on the previous slide, these operational costs, which include insurance, are already included in the actual mileage reimbursement. When a traveler is using a personal vehicle and the OGS trip calculator has shown a rental vehicle would cost less, what is the traveler reimbursed for? A, total miles traveled, B, total miles traveled plus fuel, C, the number of miles that equals the rental rate, or D, the number of miles that equals the rental rate, refueling costs, and mileage to the agencies. Okay, see a lot coming in, some C's, some D's. So the answer here is actually going to be D, the number of miles that equals the rental rate, refueling cost, and miles to the agency. So when the cost of a rental vehicle is lower than a personal vehicle for mileage reimbursement, the OGS trip calculator can help you calculate the rental vehicle cost with the number of miles that you need to input into your expense report. So this rental cost, again, is composed of the rental rate, the refueling cost, and the mileage of where you're traveling. Again, as a reminder for the New York Code's rules and regulations, we do require travelers to use the most cost-effective option, and using the OGS trip calculator can help ensure that a traveler is following this requirement. Expense reports must be submitted within how many days from the end of a travel event? 7 days, 14 days, 15 days, 30 days, 45 days, or 60? See a lot coming in. Yes, the answer is going to be D, 30 days. They must be submitted within 30 days at the end of the travel event. Employees are still required to submit expense reports, even if they missed the 30-day submission window. So you are required to submit within 30 days, but you are still entitled to submit it afterwards. If there are repeated delays upon the submission of expense reports, the employee could end up having their travel card revoked or other disciplinary action.
So for our next question, true or false? If a receipt is available, you must always submit the receipt for a travel card purchase. Either A, true, or B, false. Seeing a lot of A's, which is the correct answer. So receipts are required for all travel card charges, including those related to meals. This can be found in the documentation or receipt requirements for expenses in the Travel Manual on page 12. Also, the GFO section 13.4a, Employee Travel Card Reconciliation, states that expense reports should detail all expenses for the travel event, including expenses that are on the state travel card and an employee's out-of-pocket expenses. Which expense types may be expected to fall outside of travel dates? And hint, there are multiple correct answers. Can it be airplane tickets, mileage, meals, lodging, train tickets, conference fees, parking, tolls, vehicle rental costs, or fuel? Seeing a good mix of answers. So the correct answers are A, airplane tickets, D, lodging, E, train tickets, F, conference fees, and I, vehicle rental costs. Purchases for airplane tickets, train tickets, and conference fees we generally see as purchases prior to traveling, where vehicle rental costs and lodging are generally dated after the travel end date. When can a travel card be used for non-cardholder travelers? A, never. Only the named cardholder can use a travel card for their own travel expenses. B, when the coworker you are traveling with forgot their travel card. Or C, when the coworker you are traveling with doesn't have a travel card. See a lot of A's coming in, which is the correct answer. Correct answer is never. Never is the best practice. However, there may be exceptions such as interns or new employees. If a travel card is used for a non-card holder, supervisory as well as finance office approval is needed. What is the best way to encourage travel card holders to reconcile their charges? A, remind them via email. B, remind them in person. C, suspend card privileges. D, reduce card spending limit. E, re-administer travel card chaining. Or F, other. Seeing a lot of answers coming in. The correct answer is actually kind of a trick question. There is no one right answer. So all of these answers are correct. For anybody who had answered other, we do ask if there was anything you found to be successful in having employees enter their travel card charges. And please feel free to put those suggestions in the chat. Of course, all of these options are able to be used to help encourage travel card holders to reconcile their charges and would be used based on the best option for the situation. So that is all we have for quiz questions. So as we come to the end of our presentation, we wanted to share some of the common issues we've encountered while auditing expense reports. These are things to keep in mind when creating and reviewing expense reports to help avoid errors that may result in denials. So the first being unreconciled travel card transactions. Travel card transactions should be reconciled within 30 days of the completion of the travel event. They are considered fully reconciled when the related expense report has been approved by OSC. Another are duplicate reimbursements. So the best way to avoid this issue is by submitting your expense reports timely and by checking your expense report history to ensure you're not submitting the same travel expenses more than once. Mileage and fuel charges being claimed for personal vehicle use. So mileage reimbursement rates for the use of a personal vehicle include the cost of fuel. So travelers should not be reimbursed for fuel and mileage for the use of their personal vehicles. Another are missing or incorrect travel dates. Travel dates should accurately reflect the beginning and end dates for each travel event, while the expense date should reflect the date each expense was incurred. Incorrect mileage claimed or incomplete addresses. Mileage claims must be calculated correctly and take into account the lesser of mileage rule. Addresses should be specific enough to identify the exact travel locations. Another are incorrect per diems. So this happens when the chosen per diem expense type does not agree with the method of travel. So for instance, if a traveler stayed with a friend for an overnight trip but chose method 2 as their per diem expense type instead of method 1, this would be the incorrect per diem expense type. Travelers and reviewers should ensure the chosen per diem expense type is appropriate and in accordance with the OSC Travel Manual. Another reason a per diem is incorrect is because the wrong per diem rate is used. Travelers and reviewers should ensure per diem rates are based on the lodging location, and do not exceed the amount set by the U.S. General Services Administration. Another is missing or incomplete justifications for exceeding per diems. So travelers should not exceed the maximum lodging per diem rates. However, in cases where this cannot be avoided, the traveler must have a justification and obtain prior approval. The traveler must also attach the justification and prior approval to their expense report. Another is incorrect expense types selected. Travelers should choose the most appropriate expense types for their travel expenses. For a list of expense types and their definitions, please see Chapter 13, Section 9 in the GFO. Another are incorrect or no documentation attached. We also frequently see expense reports that do not have the required documentation attached. Examples of documentation that must always accompany an expense report are receipts for all travel card transactions, as well as any claims for reimbursement, and documented prior approvals for certain expenses that do not adhere to the state's travel rules and regulations, such as when a traveler exceeds the maximum lodging per diem rates. And the last of our audit observations, per diems are not allowed for day trips because their travel times don't coincide. So for day trips, we see travelers claiming meal per diems when their travel times do not meet the requirements in the OSC Travel Manual. Travelers should not claim a day trip meal per diem unless the travel time begins at least 1 hour before their normal start time or ends at least 2 hours after their normal end time. So for some reminders and best practices. Know the state's travel rules and regulations. We recommend reading the OSC Travel Manual in Chapter 13 and the GFO to become familiar with the state's travel rules and regulations. Ensure the most economic method of travel is used and charges are in the best interest of the state. These guidelines are fundamental to New York State travel and should be followed by all agencies. Obtain and include prior approvals if required. An example would be when a traveler exceeds the maximum lodging per diem rate, but may also include other travel scenarios where the state's travel rules and regulations cannot be followed. Periodically review employees' official stations to avoid unintended tax consequences. Submit expense reports and reconcile travel card charges within 30 days. This is important for effectively monitoring travel card use and for reducing the potential for complications if an employee were to leave state service. And to include some of our reminders and best practices, travelers and reminders should ensure the following: that mandatory fields are correct, that expense line dates fall within the travel event start and end dates as applicable. Day meal and extra meal per diems must follow the eligibility requirements based on the travel times and work schedule of the traveler. We strongly encourage travelers to enter their normal working hours in expense reports when they are entitled to day meal or extra meal per diems. Prior approvals are documented and attached. A justification should also be included for any travel scenarios requiring prior approval. All receipts are attached to the expense report in SFS. If a traveler lost a receipt, the No Receipt button in SFS must be checked and an explanation provided in the comments. For online agencies, all travel card charges must be brought into the appropriate expense report from the employee's wallet and listed as a travel card charge. Certain travel card charges should offset reimbursements. For example, if a traveler uses their travel card to purchase fuel and is also claiming mileage, the fuel charge must be assigned as a non-reimbursable expense and must offset any reimbursements owed to the traveler. Travel card charges found to be inappropriate must be reimbursed by the employee. This can also be done by offsetting any reimbursement amounts they are owed. We ask that you do not resubmit an expense report that has been denied until all the issues identified have been addressed and corrected. I will now hand this over to Alex, who will be providing some closing remarks.
All right, thank you, Ashley. So finally, we created a list of valuable resources for questions related to travel expense. So here's the list here, and you'll be able to access those. In the bottom link for the travel advisory, you will also find COVID-related travel updates that are currently in effect, such as Travel Advisory 15. So please check out the presentation PDF on the OSC website. I know I saw a couple questions out there. So it'll be on the OSC website under training resources for state employees, and save these resources for your reference for future use. This concludes our Travel Basics and Beyond course. We hope we found that this presentation was informative, and we thank you for your time. And any other questions that may arise, we ask that you just go through your agency's finance office and supervisor to discuss those questions first before reaching out to our travel mailbox, which is travel@osc.ny.gov. So thank you again for attending, and have a great day.